Welcome back to Market on Close. It's time for Options Corner. Kevin Green is here to take us through the levels to focus on for the S&P 500. Kevin, welcome to the show. All right, let's start with the look at the daily chart. What specifically stands out to you, Kevin?
Yeah, for the daily chart, we still remain in this uptrend, and we may even have, obviously, with the negative day today, if we do close negative here, it still looks positive when you're looking at the candle structure. We might have a little bit of an indecision candle for today's session, but it wasn't too negative, to say the least here. We're still holding up above that 50-day moving average, which once again, I think is going to be a win for the bulls for this week here. If we do see any type of meaningful breakdown, first area of support I'm looking at is 5,600, and anything below that, you start asking yourself, we get back towards that 5,400 level. Right now, there isn't any indications that that's going to be the case, but we did see market breadth kind of expanding based on what we saw earlier this morning, where we saw very light participation when it came to the S&P 500. Right now, we have a little bit less than 50% of the stocks in the S&P 500 in the green here today. So we're holding up. Obviously, we have a lot of economic data points going to hit this week, as well as the FOMC meeting. So not surprising that we actually saw a consolidation day, and that's actually a pretty decent thing. If that happens for the next couple of trading sessions, but we do not see any further breakdown or any type of breakdown here, I still think that the confidence right now is for the bulls to try to get us to that 200-day moving average, which is sitting at around 57.50, give or take.
Okay. And then on a more intraday level, the low of the day was what, 56.34. So we're at least trading above that. We have seen a few sectors turn positive: communication services, industrials, consumer staples, essentially flat. So what stands out on the intraday chart?
Yeah, for the close here today, we'll focus on the market on close order. That actually has been moving some markets over the last couple of trading sessions. We're actually testing a pretty key area here, the 56.65 area, looking for a bounce off of this level. And if not, we're probably going to go down and potentially test that 56.50. But it appears that we're trying to at least hold this level up here for now. To the upside, looking at 56.85, I'm not seeing anything above that here to really give us some confidence that we're going to see, the squeeze going into the close. It probably will be a little bit more of a muted close, to say the least here. But the market on close order, the imbalance number, has been a major driver, and it has been more of a driver to the upside rather than downside here. So we're losing a little bit of steam for the most part, but once again, consolidated day, everything's for the most part holding up here. Volatility is actually something to watch. We did see the market actually get back to more of a normalized VIX curve for the most part. Still in a backwardation if you're looking at the VIX futures, but if you're looking at the spot VIX minus the front month the VIX futures contract, we were actually in the negative earlier on today, or the positive earlier on today, meaning it was normalized. That's kind of reverting or getting close to inverting here a little bit. So something to keep on the radar, but nothing, once again, too scary. I think we're probably going to have to wait until Wednesday to really see some fireworks in this market, Caroline.
Yeah, of course. That's when the Fed will not just give the interest rate decision, but we'll hear what they have to say in terms of the outlook. But speaking of the VIX, we have been seeing some bouncing around, some reversals, but overall the moves have felt pretty muted compared to what we've seen in the past. So a VIX around, 23 is normal?
It's not normal. It's still a little bit elevated here, but it's actually really good for traders or intraday traders when it comes to scalping. When you're looking at around a 23, 24 VIX, you're pricing in around a 1.4 to 1.5% implied move or implied range on a daily basis. That's actually a pretty decent environment for trading, but a normalized VIX would be more towards that 17-ish level, 17 to 17.5-ish level. So we still have some room to go to the downside. Obviously, there's still some uncertainty over the next couple of weeks when it comes to tariff policy, but if you look at some of the commentary over the weekend, there might be some bright spots that we may see some tariff adjustments over the next 2 to 3 weeks. There was a trade advisor for the White House ahead of Bloomberg interview actually earlier this morning that kind of hinted towards that, and then President Trump over the weekend also had that type of commentary. If that were to be the case, it probably would crush volatility a little bit more to the downside here. I think the biggest risk that you have for volatility this week is obviously going to be the Federal Reserve. What type of commentary can they actually provide to the market that would give them a little bit more enthusiasm to continue to buy? And obviously it's not going to be on the interest rate front, but it might be on the quantitative easing front. If we start hearing some more commentary about potentially just ending the overall balance sheet runoff, that would be the first signal or first sign that the Fed is willing to step in and try to provide some liquidity support if needed in the Treasury market. And QE is actually probably a lot better policy than interest rate cuts at the moment here. So that is really going to be that bull sign for the from the Fed. And if not, that's probably where you see a little bit of a volatility spike and equity markets pulling back.
Okay. All right. Noted there. And finally, I know you have a chart for Palantir, which we'll be discussing after the close when it reports earnings. Pretty muted action in shares today, only up about 0.1%, but very close to all-time highs. What stands out in the chart there?
Yeah, it's not so much the chart. Obviously, it's kind of contesting those all-time highs as you're talking about going into the earnings announcement. But it's obviously the bullish trading activity that you're seeing on the call side here. And I wanted to highlight two trades that I thought was actually very interesting for our viewers here. One was actually $1 million premium trade into the 133 calls. This is an outright purchase here expiring for this Friday. So very aggressive. Somebody's taking the tone or taking the trade that they believe that the move is going to move to the upside or the stock's going to move to the upside here. You also saw a lot of activity in some out of the money calls, some really out of the money calls. The 165 calls have been hitting the tape pretty much all day here, expiring on June 20th. So keep your eye out on that. Those were going for about $3.25. You call those lottos if you're an options trader. So a lot more bullish positioning than bearish positioning when it comes to Palantir. If we do get a substantial breakout to the upside here, Caroline, there's enough options positioning on the call side right now that probably could create a squeeze for price action. And that's what the bulls really want to see. If we do not have any type of great news or commentary coming from the company here, the unwinding of that trade or this bullishness could create a little bit more of a collapse in prices. But for now, really significant bullish skew here. I'm actually very curious to see how they report, because if we do get a decent squeeze here and you can get above that 138, 139 level, is not outside of the realm of possibility here that you actually do see a squeeze significantly higher, not only maybe today after market or tomorrow in pre-market trading, which is very light volume, is really where you can get some very aggressive price action to the upside.
Okay, so a bullish skew in terms of the trading, certainly not coming from the analyst side, though we talk about this quite often. Analysts have been very wrong with this name, but I was taking a look. The highest price targets on the street, there are only two above where it's currently trading right now, and it's only 50 cents above where it's currently trading 125. So analysts staying cautious on this one, despite this really impressive 64% year-to-date gain. Kevin Green, thanks so much.